Presenting the Organization of Socialized and Economic Housing Developers of the Philippines' Shelter Agenda for a New Decade. The Philippine Private Sector Initiative, a new human settlements and urban development agenda. Institutionalize private sector participation in policymaking under the new Department of Human Settlements and Urban Development. Improving ease of doing business. Expanding housing finance and sustainable incentives programs for homebuyers. Upholding fair access to land through a genuine national land use policy. Redefining affordable housing. Promoting green building, resilient settlements, and post-pandemic approach in designing spaces. To learn more about the Organization of Socialized and Economic Housing Developers of the Philippines, please visit us at www.oshdp.com or email us at secretariat@oshdp.com.
The Wallace Business Forum is a 30-year-old think tank that provides a valuable link between the country's top business leaders and the leaders of government. It helps CEOs to understand the environment with which they must operate through a series of publications and meetings that access the business, political and economic environment and predict where we may go. WBF is considered one of the most authoritative, independent sources of information and assistance in understanding in the Philippines. We tell it like it is.
We live in a new world. A world that is changing faster than we ever thought possible. A world where we can either adapt or get left behind. It's not about the swiftness of the change, but the greatness of it. Social, cultural, political, but perhaps most of all, professional. Businesses are evolving in different ways, and it's opening up countless new doors for commerce. And in this moment of rapid transition, one thing remains constant. For more than a century, we have served as one of the longest and most vibrant American chambers in Asia. Time and again, we have recognized and confirmed our commitment to trade and commerce, and the good it does to our members. By bringing leaders together, by being a voice of business, by making the right connections, and by taking action on the things that matter. This is what AmCham was built for. We are here to serve the interests of Filipino and American businesses by being an avenue for valuable knowledge, effective networking, proactive advocacy, and continued affiliation. All of which contribute to the constant development of the economy. This new and shifting world is full of possibilities. But for us, it comes with a great responsibility. We are AmCham, gathering information to share and discuss the things that drive us forward connecting leaders, governments, and businesses, taking action on commercial, economic, and even global issues, contributing to the growth of the economy that would strengthen the relationship between its members. For commerce, for progress, and most of all, for country. AmCham Philippines.
The housing industry has evolved dramatically in the last few decades. And as we reach a very interesting time in our history, we are being called to evolve even more rapidly. And we here in the Subdivision and Housing Developers Association can help you evolve the way you should. We organize to improve our capabilities. We collaborate to synergize. We expand our network to increase our knowledge. With over 300 members nationwide and 8 regional chapters, we collaborate to improve regulatory and legislative advocacies for housing and urban development. Partnered with a DSHUD, we strive to elevate the industry to better heights, while giving back and paying forward to communities through CSR programs. With competent and dependable leadership, SHEDA capitalizes on the individual strengths of its members and magnifies their visibility through relevant presence in programs and activities pertaining to housing development. A community of professional, capable, and excellent developers who exhibit dynamism, especially in the changing and evolving landscape of the housing industry. It's time to bring your journey as a developer far with SHEDA. For details on how to join, you may log in to sheda.ph. Find them on social media. Connect, network, grow with the Subdivision and Housing Developers Association.
Sign up for a year and pay less than 71 pesos per month. Visit tmt.ph/digital to get your free 30 days of the Manila Times Digital Edition.
We see an opportunity to do what's right, to change business as usual, to become business as it should be, where people don't just live and work, they thrive. To do that, Colliers is committing to elevate the way we do business, to elevate the built environment. We will minimize environmental impacts in our own operations and through the services we provide our clients. We will increase diversity and inclusion in Colliers and across our procurement practices to create an atmosphere welcoming of diverse ideas and perspectives. We will promote health and well-being in our operations and through our client services to help improve lives. Together, we will elevate the built environment and build better for our collective future. For ourselves, for our clients, for our communities, for the world.
Good morning, everyone. I hope all is well. Welcome to Colliers' third quarter 2022 property market briefing. I am Patricia Cruz, Colliers Associate Director of Office Services, Tenant Representation, and I will be your host and moderator for today's webinar. As always, we are excited to share with you our latest data and insights on the Philippine real estate market, covering the office, residential, and retail sectors. Time flies so fast, and we are now approaching the end of 2022. Today, we will look at how the property market performed in the third quarter of this year, the recent events that may have had an impact on the industry, and our experts' outlook for 2023. But before anything else, let us first acknowledge our partners who made this webinar possible. The Department of Human Settlements and Urban Development, the British Chamber of Commerce Philippines, the Australian-New Zealand Chamber of Commerce Philippines, the Organization of Socialized and Economic Housing Developers of the Philippines, Wallace Business Forum, the American Chamber of Commerce of the Philippines, the Subdivision and Housing Developers Association, the Philippine Daily Inquirer through Inquirer Property, the ABS-CBN News Channel, the Business World, the Philippine Star, Business Mirror, the Manila Times, and Malaya Business Insight. Again, I encourage everyone to stay for the open forum at the end of the presentations, where our experts will answer any questions you may have, and you may send your questions through the Q&A box. If you want to receive the copies of our speakers' presentations, please do not leave a message in the chat box. Instead, send an email to philippines.marcom@colliers.com, and our team will reach out to you. We also encourage you to download copies of our Q3 2022 property reports via the links we will send through the chat box. So with that, let's begin our webinar. During our last briefing, our experts highlighted that office transactions were up 62% in the first half of 2022 compared to the same period in 2021. Office completions reached 147,000 square meters in quarter 2022, and that a supply-driven vacancy, which stood at 17.7% in the first half of 2022, is still taking effect. For the residential sector, we reported that rents are still starting to rebound, while prices started to increase at a faster pace. Buyer interest in pre-selling condo is also starting to pick up, with take-up for 2022, likely outpacing 2021 demand. The retail sector, on the other hand, is projected to record a gradual recovery in rents this year, with F&B comprising bulk of upcoming retailers. We also forecasted that vacancy to stand at 16% this year, slightly lower than previous projection of 17%. With the economy growing 7.4% in the second quarter and a seasoned economic team within the new administration cabinet, is recovery finally being sustained? are we to end 2022 at a more solid footing than we did 2021? Or will global headwinds dampen sentiment? We hope to answer these and more in this webinar. Thank you, Kevin and Joey. I'm now seeing many questions in the Q&A box, and I'm sure our speakers and panelists can't wait to answer these. So let me introduce them again. First is Colliers Managing Director, Richard Raymundo. Senior Director of Office Services, Tenant Representation, Dom Fredrick Andaya. Senior Director of Advisory Services, Theresa Teodoro. Senior Director for Capital Markets and Investment Services, Paul Chua. And Senior Director of Valuation Services, Paul Vincent Ramirez. I would also like to invite Joey and Kevin to be back on screen to join our panel. Okay, so let's get this ball rolling. So the first question is for you, Joey. Okay, this question came from Mr. or Miss Allegra Mendez of REBAP. What factors under the current administration can affect the prices of real properties in Metro Manila, and what will be the scenarios be an increase or decrease of these prices?
Okay, thanks for the question, Pat. I in fact discussed this in my second quarter presentation when we provide a snapshot of key highlights of President Marcos's State of the Nation address. And judging from his announcement, I think infrastructure implementation still will have a positive impact on projects and residential properties across Metro Manila. So you have the likes of Metro Manila Subway, even the airport in Bulacan will have a marginal impact on the prices here. So we believe that infrastructure implementation still is a crucial part of this administration's program, part of its post-COVID recovery action plan, and that should have a positive impact on prices as well, and will probably chip in to increase in residential prices beyond 2022.
Thank you, Joey. I can see Richard nodding his head. Maybe you want to add on something to that.
No, I agree. I definitely agree with what Joey said. I think what we don't realize is a lot of the developments, the infrastructure developments that were started in the Duterte administration will still happen during the Marcos administration. So that will have a huge impact. And even after the Marcos administration, like the subway system, that is going to have a huge impact on prices and development.
Okay, all right. Thank you, Joey and Richard. So the next question is for Tim. This came from Crisol Flor de Luna of Discovery World Corporation. And the question is, which areas do you see potential in terms of condominium projects, house and lot, commercial, and leisure farm? So I think someone's buying properties here, all right?
Okay, for condominiums in Metro Manila, there's still a lot of supply in the market, but we did see that for the Taguig area, Fort Bonifacio area, and Mandaluyong City, the remaining inventory life of those areas will be 2 years or less. So those are good areas for condominiums in Metro Manila. House and lot, it's quite hard to find properties for house and lot developments inside Metro Manila. Most that we see really is condominium. So that usually goes outside the provinces around. So Cavite, Laguna, Batangas, Bulacan. We see a lot of activity in areas, of course, near the infrastructure developments, especially along Calax. And it's more the affordable segment that's really booming in those areas. For leisure farm, it's kind of also hard to find. I guess where land is available and still cheap for a leisure farm development. But of course, usually if your target is again Metro Manila, it's good if it's within a 2-hour drive of this location. Commercial projects, I remember Kevin mentioned to look at areas where there are low vacancies, fast moving, and relatively good rates. And he mentioned Fort Bonifacio and Makati is good for office development.
All right. Okay, Tim, the question is still yours for the second one. This is from Miss Marie Eloise Manuel of CEMEX. Are higher input costs affecting the number of developers project launches? Why or why not? And how about the completion schedule of these projects? And until when are we likely to see the wide demand and supply gap?
Well, yes, they are. The high input costs are affecting launches because we're engaged in pre-selling, so developers have more or less have budgets to set before they can launch projects, and so volatility in the development inputs make it difficult to finalize these budgets and pricing. So some developers have really opted to postpone until they reach a certain level of comfort in terms of their costings, but not all of the launch postponements are due to that. Some of them are really more a strategic move of the developers, wherein they just want to also more or less concentrate on selling out their existing developments before launching new ones. And then in terms of completion, of course, Joey also mentioned that there are really the higher costs and also supply issues are affecting the construction periods of the developers. So that's why we also see more condominium developments offering a 6 to 7 year development period. Before it used to be just 4 to 5 years. In terms of gap between supply and demand, I think there's a gap, but it's not so big. The developers have very been proactive in changing their strategies when they saw that the market was soft. So they did taper down their launches. So they addressed the current conditions quite quickly.
Okay, all right. Thank you, Tim. If any of our panelists would want to chime in on any of the answers or to the questions, please do so. So anyway, the next question is from Andreas Alcantara of Union Bank, and this is for you, Joey. Now that most COVID-19 related health protocols are lifted, and we finally see a recovery in office, residential, and retail sectors.
Sorry, can you?
I think she's basically asking, will there be any recovery right now since most of these health protocols have been lifted? I think especially the new ones of unmasking right now, even for indoors.
Oh yes, definitely. Especially for the retail market. Again, 85% of consumer traffic pre-pandemic figure. That's pretty encouraging for the retail sector. Even for the residential market, there has been a greater interest to open or have more what do you call this, broker meetings, broker conferences. In fact, I attended a recent broker briefing a couple of days ago. So you have all these brokers and sellers being invited, and that really stokes interest for these projects. And again, Dom and Kevin might want to add, but for the office segment, as Kevin discussed earlier, this relaxed restrictions have also been helping lift the demand for more office space. In fact, and this path, we're seeing more inspections.
Yes.
for sites, more BPOs looking for office spaces, and brokers have been active, going outside of Metro Manila, visiting provinces, and looking for office spaces for BPO players.
Yes, that is so true, and that's great that that's happening. Thanks, Joey.
Yeah, just to add to what Joey said, so COVID is not a factor anymore in office leasing activity. So I think the industry, the sector, office sector has already outgrown the COVID challenges, and there are other headwinds that needs to be looked at, like for example the work from home. Actually, how would that affect real estate? So Dom, you want to chime in also?
Okay, for this one, Dom and Kevin, you need to chime in because this question is addressed to both of you. So this is from Bernie Cahiles Magkilat of Manila Bulletin. How important is POGO for the recovery of the office space sector? Will the office space sector recover next year with or without POGO?
Yeah,
I think Kevin, you can go ahead for this one. Yeah.
Yeah. we need to move on from POGOs for the office sector. Why? So I think, as we reported in the previous quarters, no, a large chunk of them have already left. I think half of them have already left the country. The current contribution of POGO space to total office stock is just 5%. So if there is like a full POGO ban, the impact is only 5% additional vacancy. And as I mentioned in this quarter report, we are still seeing sustained quarterly transaction activity. We're going to end in a net positive office space demand, even without significant POGO transactions in the market. So let's give other sectors a chance again in contributing to office space demand, like the BPOs. So IBPAP has a really good positive forecast for headcount growth in the next 6 years, and it's not something that should be sidelined. It's going to be an important factor in office space demand in the coming years. So just to end, let's move on from POGOs already.
Let's move on from COVID and POGOs, I guess. How about you, Dom? Do you have anything to add to that? Or I think Kevin already mentioned everything that needs to be said. All right. Okay. So the next question is again for you, Tim. This is from Pythagoras Brian of FINMA. What's the outlook demand for Metro Manila townhouses, and what's moving affordable home developments outside Metro Manila?
Well, for Metro Manila, we don't really see a lot of townhouse developments because land is really very expensive. Yeah, so we usually see this, in the luxury segment, and sometimes a small number of units per project. But I think those get taken up really fast, like in a 1 or 2 years, they get sold out. For outside Metro Manila, so cost is a factor, like you also mentioned, because it's already high in Metro Manila versus the suburban areas. Definitely, COVID spurred more interest outside. The growing acceptance also of work from home is also supporting this interest. So this type of development fared better compared to condominiums when you compare their pre-pandemic levels versus now, no? And we see these developments really capitalizing on infrastructure developments, especially the upcoming ones. So a lot are already positioning along Calax, of course, Bulacan with the airport, like that.
All right. Thank you, Tim. Okay, and the next question is for our two Pauls, Paul Ramirez and Paul Chua. So this is from Jose Carlos of Polymer Products, Inc. Which of the first and second tier cities or provinces show the greatest potential for growth? That's quite difficult.
So allow me to take that poll first. So yeah, if we use our valuation instruction, especially from our investors as a metric, we still see that Metro Manila is still the #1 location as far as our investors are concerned. And the second one will be the fringes of Metro Manila, that is the Calabarzon area. We see a lot of activities for horizontal developments and investments there. Another one is we have to take a closer look at the big infrastructure projects. So there is one in just up north, the new airport, Bulacan Airport, and there's even a sign that the Sangli International Airport down in Cavite will be considered as well. And we also see a lot of big reclamation projects ongoing right now. So if you go to Manila Bay, you see a lot of movement, a lot of boats dredging and putting up sand, and there's several islands will pop up there. So these are the things that we are in a watch out for. So it's still Metro Manila, but Metro Manila fringe is still a good opportunity for investors.
Okay, so not too far off. How about you, Paul? Sure.
I think I echo what Paul has mentioned. Maybe to add to that, to those locations, also look at properties in the north, I think we're seeing a lot of inquiries and demand in those areas. Second tier, maybe Tarlac, Capas area where the BCDA properties are. Pampanga has been very active in launching new areas for development, both for residential, commercial, and even industrial has been very, very good in those locations. Outside of Luzon, we've always been talking about Cebu and Davao. It's always a good area for these urbanized locations to have support logistics, especially for industrial.
All right, thank you. Okay, and then, okay, this is again for Dom and Kevin. From Jeremiah Panpolino of Santa Lucia Land, are BPOs still leasing offices, expanding, or will work from home continue? You want to take this, Dom?
Yes. Well, they're still expanding, no? We have a slide on that, and even IBPAP is projecting significant growth over the next few years. But of course, in terms of the what do you call this, the contribution to the office space, it's not a one-to-one ratio anymore. We have the shift multiplier before, now we have the work from anywhere ratio. So the contribution to the office space of this BPO growth is tempered by anywhere between 20 to 40%. That's our estimate. But nonetheless, yes, it's most a significant contributor to the office demand. And it won't be just solely for Metro Manila. It will be 50-50. 50% provincial, 50% Metro Manila.
Okay. Kevin? Okay, thank you. Really good at. Okay, the next question is from Ronald Alan Oy of Pueblo de Oro for Tim again. What strategies are developers taking to maintain selling prices within the capacity of the market?
Sorry. Well, the developers haven't really adjusted their price list. So instead, they're making use of promotions and flexible payment terms to make it more affordable. So extended payment terms beyond the turnover of the development, sometimes 18 months to 2 years after the completion of the project, they're giving this out now. And then they're still giving substantial discounts on the TCP as well. We've seen from 5% to 16.5%. So basically, they're trying to make it more affordable through the promotions and the payment.
So I think I saw one that was shown by Joey as well, that the lower down payment for the high ends as well. I think that's something that some other developers are doing, especially during the height of the pandemic. So another question, this is for Kevin, from Ron Morales of Alorica. What is the impact of the sustained work from home arrangements of some BPOs in the office market rental rates?
So it's actually difficult to derive the impact of work from home exactly on rental rates. No? So, here we really still look at vacancy behavior per submarkets as the primary driver for rental rate movements in Metro Manila. So whether or not how work from home would affect those vacancy rates, we'll see what will happen as the 100% work from home pronouncement of the government is implemented towards the next 12 months. But if we're just going to see where rents are still going down or rents have already stabilized, we just need to look at per submarket vacancies. And for example, some markets, as I've said, are doing better than others, like BGC, which is the fastest moving market right now. But others are really suffering from huge vacancies. So rental depression will still continue in those areas.
All right. Okay. Thank you, Kevin. Now, this is for Tim and Dom from Kurt Fang of Security Bank. Outlook on mid-price vertical projects in Metro Manila and nearby provinces. These provinces specifically for Laguna, Cavite, Batangas, and Bulacan. I think Tim, you can go ahead.
Okay. For mid-income in Metro Manila, it's improving on a per quarter basis for 2022, but it's still a bit far compared to pre-pandemic levels. It's maybe 30% of what we registered for 2019. But at least it's improving, but developers should take note that it's still very competitive. There's still substantial inventory left for that segment, and you have to take stock of where you're gonna locate. Take stock of your competition so you'll know where you should strategically launch your projects. For mid-income in Cavite, Batangas, Bulacan, and Laguna, the mid-income segment, house and lot segment for that area is slower compared to affordable. It's more really affordable and in some cases economic. No, that's driving sales in those areas. Mid-income is a smaller demand contributor for those provinces.
Okay, thank you, Tim. How about you, Dom, for commercial per se?
Sorry, can you repeat the question?
Okay, so basically the outlook on mid-price vertical projects in Metro Manila and the nearby provinces, so Laguna, Cavite, Batangas, and Bulacan.
I think I'll just go by Tim's answer. Sorry, that's for residential, no?
It's very sad, but it can also be for call this office. If there's anything we can add on to offices.
Well, in terms of offices, we're saying particularly for the BPOs, it's going to be 50% expansion in the countryside. So, well, Cavite, as one of the most populous provinces in the country, would be at the forefront of this. It's very simple for BPOs. Just look at the provinces, cities, municipalities that have a lot of population, and it will follow that a lot of workers live in that area. Then those are the target locations for you to set up your expansions.
There's huge potential really in the countryside, as just to add to Dom's point. No, historically, Metro Manila still dominates the Philippine office market, about 70, maybe even 80%. So it's now time to look into the provinces and grow that portfolio as well, to be able to capture the demand that has already been committed by the industry, the BPO industry.
Okay. Thank you, guys. And maybe if developments and offices will be going to these provinces, it's high time for developers to probably also look into having a development that could cater to the BPOs, just in case they move into those areas. So anyway, the last question that wasn't sent through the Q&A box is again for Tim and for Joey. What will be the key trends for residential real estate for 2023?
Well, for residential in 2023, we see an uptick in demand. We're already starting to see it now. We're surpassing 2021 levels, so we're optimistic for 2022. But it's still going to be highly competitive. Developers are still going to have to employ a lot of promotions to push their sales, to make it more affordable to the market, because we're still in the recovery phase for 2023. We also saw from our poll questions that there are some changes in preferences of buyers. Green and sustainability features are becoming more important to them, as well as also some resiliency features. So for outside Metro Manila, the demand for horizontal affordable is still going to be strong. And it gets more competitive. So a lot of the developments there are really trying to improve on their project concepts, putting in a lot of amenities and features to make it more unique, no, or better selling concepts compared to competition.
Joey, do you want to add anything to that? Or
Well, I agree with him. For the pre-selling market in Metro Manila, those are very good figures we saw for the first 9 months of 2022. So we're likely to exceed 2021 or even 2020 data. So that's a pretty bullish pre-selling market so far. More horizontal projects, which we've been seeing since 2021. And then the usual hubs, so we have northern, central, southern Luzon, and also similar to what we asked our respondents earlier, the incorporation of green sustainable features. We're already seeing some developers doing that, installing solar powered panels, for instance, and that will likely continue. And it's not just really the luxury or the ultra luxury projects that are really eco-friendly or eco-conscious, but even the mid-income segment. And we see some of these developers, especially from the south. So that will likely continue moving forward.
okay, thank you, Joey and Tim. Now from the questions from the Q&A box, okay, we have quite a lot, so I'll try to pick a handful before our time ends. So this is for Paul Chua from Maribel Rubia. Are you seeing an increase in warehouse facility for the next 3 years? If yes, in what areas?
Okay, warehouse facility hasn't really stopped. Ever since the pandemic started, even before that, we're seeing a lot of warehouses being developed. It's just that they're being developed by smaller developers, and they are not as well known as the larger developers. So we're seeing new warehouses coming out of the fringes of Metro Manila on top of the usual Cavite, Laguna, and Batangas areas. So in the next 3 years, we expect that to continue. And I think the demand is there. There are some developers that we're talking to, they don't even need our help because they're fully leased out. So, I mean, the demand is there, the growth expectations are there, and I think it's going to continue in the next couple of years.
Thank you, Paul. Now, this is from Jose Eduardo Custodio for Paul Ramirez. Residential mostly touched on condo prices. What about residential land prices? Which area will see the biggest appreciation in land values?
Okay, so for residential, horizontal residential, so we actually didn't see any volatility as far as the prices are concerned, even during the pandemic. So the demand for residential horizontal is still there. But what we've seen a great movement for is in the leisure horizontal, in the fringes, in Tagaytay, and in the Subo area, we've seen a knee-jerk reaction from the Metro Manila residents who wants to have an escape from the stifling lockdowns in Manila. But right now, it has already stabilized and is maybe starting to correct. But in Metro Manila, all land prices in residential are stable and growing, especially for the established development, and as well as the Calabarzon residential horizontals are doing very well right now.
All right. Thank you, Paul. Now for Tim, question is from Jonathan Martinez. Are we still seeing increases in sales cancellations for condos in NCR?
Well, 2021 was really where we saw a lot of net cancellations from a lot of developments from Metro Manila. But in 2022, it's vastly improved. So we're seeing less for this year. So I think major cancellations already happened in 2021, and then 2022 a little bit more maybe, but not as bad.
Okay, that's good to hear for our developer partners. Next is from JP Balboa. Hi, JP. This is for our team, for Dom and Kev. Would you still advise office occupiers to prioritize PEZA buildings, even if they avail of BOI incentives, given that government regulations may still change in the future? Okay, Dom and Kev, go ahead.
I already answered that in the chat. Joke lang, I'll answer it. So yes, I would agree, just for occupiers to hedge their regulatory risk. But it really depends on how pressing the BPOs need their how pressing they would need to implement their work from home policies to attract talent and retain talent. So yes, prioritizing PEZA buildings is a sensible move, but it depends on your organization.
Yeah, to explain further, the PEZA transfers, the company's transfers from PEZA to BOI is an operational nightmare. It's a documentary nightmare. So, but then there's that opening. The floodgates have been opened for that. But yes, I agree with JP that PEZA company, it's a mature government agency with a established one-stop shop facility. Then, depending on the way companies look at the work from home strategy to attract and retain talent, then they may still continue signing up in PEZA buildings. And the other thing with that is that even if they subsequently decide to transfer from PEZA to BOI, they can still occupy PEZA registered buildings. That's fine. All right. But the problem is if they decide now to be a BOI registered company, they sign up in a non-PEZA company, and then eventually realize there are issues with the Board of Investment, and probably the one-stop shop facility is not established under the Board of Investment as mandated by the CREATE law, then they may decide subsequently to transfer back to PEZA, which would not be as easy if they have done that under the BOI already. So they have to think about those issues and possibly how frequent regulations are being changed here in this country. So if they're looking at stability, then probably that's PEZA. They're looking at more work from home, that's BOI.
Okay.
And then we also need to watch out for eventually for those who are choosing PEZA, that the PEZA law, there is a proposal in Congress to amend the PEZA law. So that might address the challenge in terms of implementing work from home. So they may opt to wait and see for that amendment to happen and not change the registration at all.
Okay, thank you, Kevin Dom. Okay, so the next question is for Paul Chua from Rastin Mercado, but I think you've answered a little bit of this from the previous one. How's demand from logistics, e-commerce, and data centers? How do you see this moving into the coming years?
Okay, I guess I'd like to lump e-commerce and logistics together, and just to specify, it's domestic logistics. We're seeing consolidation. Currently, if you look at the different locations where e-commerce sites are, it's really scattered around the Luzon, no? And even in Vismin. So what the current trend is, they're trying to consolidate into a larger space to make their operations more efficient. For data centers, we've been having a lot of meetings regarding this with different clients. So almost every week we have a request. So I think data centers is very hot at the moment, and it will continue to do so until we see some sort of scaling in terms of developing from the local players. But there are demand coming in from foreign operators looking to partner locally, and local developers who wants to start their own data center operations as well. So moving forward in the next couple of years, we're going to see a lot more and more of these kinds of transactions.
Okay, thank you, Paul. Now for Tim again, from Jose Emmanuel Navarro. During the pandemic, there's an uptick of take-up in leisure and rural properties outside the metro. Do we still have these transactions? Traction?
Well, there's always consistent demand for the economic and affordable in the rural locations. For leisure, actually, we're still quite optimistic about it. The interesting about leisure is that there's really not a lot of inventory for that, but the demand is pretty high, as evidenced by the increasing prices that you see in the secondary market, as Paul mentioned earlier. Some of the leisure developments that there were leisure developments that sold out, no, during the pandemic. So we're pretty optimistic for horizontal leisure development.
Okay, thank you, Tim. Do you see like in any locations wherein there's a lot of these developments besides Cebu, Bohol?
Batangas is they do have a lot of coastline, and then quite close to Metro Manila. If there's opportunity along in Subic also, that would be good. Bataan, if there's the infrastructure that goes there, then that's also interesting.
Okay. Thank you, Tim. And then we have a question for our managing director, Richard Raymundo. From Rastin Mercado, what's the most exciting thing and biggest risk in the sector we need to monitor heading into 2023?
Okay, I think the most exciting one would be mobility, that we're going to get back to a semblance of normal and getting out of the pandemic. People who have traveled to North America, Middle East, Europe, the mask mandates are out. We are heading there. I think the last indoor mask mandate is about to be taken out. So we are headed to that direction. And with that mobility, you're going to see more activities with retail, with leisure. And as Kevin even mentioned a while ago, COVID, the pandemic, is not an issue anymore when it comes to office leasing. And that's the same for the other segments. We are going past that. The biggest risk, I would say, moving into 2023 is inflation. And that is affecting both the demand side and the supply side of real estate. So on the demand side, when inflation hits, your mortgage rates go up. And we're going to have the demand of people getting access to loans, bank loans, and higher cost of mortgage. That will dissuade some of the buyers from getting into a home investment. On the supply side, you have the developers now facing construction cost pressures. Tim mentioned that in the residential sphere, the cost of residential construction is going up. So you're now at the point wherein, do I launch my project given that I need to price my property higher on the pre-selling, or do I wait for prices to settle down? So I think that's the most pressing risk that we have in our industry moving into 2023.
All right. Thank you, Richard. Okay, unfortunately, we have no more time for the other questions. So again, we would like to thank you to all our participants, our speakers and panelists from Colliers, Joy Roy Bondoc, Kevin Jara, Tim Teodoro, Paul Chua, Paul Vincent Ramirez, Dom Fredrick Andaya, and of course, Richard Raymundo, for shedding light on the current landscape of the real estate sector and providing us with useful insights and recommendations as we face promising months ahead. We would like to once again thank our event partners, the Department of Human Settlements and Urban Development, the British Chamber of Commerce Philippines, the Australian New Zealand Chamber of Commerce Philippines, the Organization of Socialized Economic Housing Developers of the Philippines, Wallace Business Forum, the American Chamber of Commerce of the Philippines, the Subdivision and Housing Developers Association, the Philippine Daily Inquirer through Inquirer Property, the ABS-CBN News Channel, Business World, the Philippine Star, Business Mirror, the Manila Times, and Malaya Business Insight. And to officially close our program, let's hear some final remarks from our Managing Director, Mr. Richard Raymundo.
Thanks, Pat. So we are finally seeing the light at the end of this pandemic tunnel, with the remaining mask mandates soon taken out. I just got back from a trip in Dubai and I realized that the world is truly starting to move on. We should too. We are now seeing various property segments recovering or at least stabilizing from the pandemic lows. In the office sector, we are seeing it starting to bottom as transactions have improved. And we are going to post a positive net take-up this year after 2 years in the negative. Demand from POGO is virtually non-existent now, but the BPO segment has started to strengthen with employment seen to expand in the next 3 years. In the residential sector, developers have shifted to horizontal housing projects. And while the mid-income segment is a bit soft, the ultra-luxury has surprised as high net worth individuals are hedging against inflation with purchases of market-proven luxury condos. The retail sector is probably the biggest comeback as mobility has sprung back to life and people are going back to work. This last quarter, holiday spending should further strengthen rents. I hope you were able to get valuable insights from our briefing. Watch out for our year-end property forecast. Stay safe and healthy, and thank you for joining us. And please reach out to us for requirements and assistance. We would be happy to assist. Again, thank you.
Thank you again, Richard. And thank you to everyone who joined our webinar today. You're welcome to reach out to our team. And if you have further questions or if you would like to receive more information on the office, residential, and retail sectors. If you'd like to stay updated on latest news and insights on the Philippine property sector, please visit our website, colliers.com, and follow us on LinkedIn, Facebook, Twitter, and Instagram. If you'd like to hear more from Joey, he has a regular column in the Philippine Daily Inquirer called Colliers Review. It comes out every Saturday in the newspaper's property section. Colliers also has a regular column in Business World called Colliers Insights and in the Philippine Star called Colliers Outlook. So please make sure to get copies of these newspapers as well. And finally, tune in to Colliers Insight podcast hosted by none other than Joey, which is also available on Spotify and Google Podcasts. Please make sure to check it out. Once again, on behalf of Colliers, thank you for joining us today. I hope you will have a great final quarter of 2022, and we look forward to seeing you again in our next market briefing in 2023. Goodbye, everyone.